Hello folks, welcome back. This is a new week, so let's do analysis on some of the few pairs here. What we'll be anticipating this week. I'm gonna start with the dollar index. So dollar index from higher time frame, that is a weekly time frame. Let's see what we have in weekly time frame. Yeah, it's good to do top-down analysis so that you get the bigger picture before you go to the smaller picture for entries actually. So from weekly time frame, you can see there is a fair value gap here, there's a swing low, and again there is this high here, swing high. There's a liquidity above here, but before this one becomes our liquidity draw, there is some zones here we need to look at. Yeah, we have a break of structure here. After this break of structure, and the source of the move for the break of structure was this OB, and this OB is our bullish order block for weekly time frame. You can see, yeah, it's marked here. So we expect a correction back to this breaker, this bullish OB. But again, you can see we have this mitigation block here, the green candle. Yeah, is a mitigation block, weekly mitigation block. Yeah, can highlight it just like this. We use the body. We use the body this time round. That's the weekly mitigation block, the blue one. So let's see on what we have in daily time frame. Now in daily time frame, you can see this is that OB liquidity grabbed, break of structure here. This is a minor break of structure as we head back to this week, the blue one, weekly bullish order block. This blue again is the weekly mitigation block. And also you can see there is this bullish order block here, the gray colored, yeah, the last down move prior to the up move. There is a fair value gap here which was filled the last week. So this one is balanced and there is a break of structure here, but there is this bullish OB. So we expect at least the market to react on this zone. Again, you can see the breaker, the reaction on the breaker, mitigation block of the week. Yeah, I think you can see that reaction and the high of the OB. Yeah, you can see the reaction. So there's a kind of reaction you may expect at this zone. Then after this, we need to see what we have in 4-hour time frame. Now in 4-hour time frame, you can see we have, this is the bullish OB, and you can see here the mitigation block here, and we had this equal low. So last week the market created equal lows here, which has already actually been taken out. They have taken out the equal lows right into the mitigation block of daily time frame or of weekly time frame. And so this one is not an X anymore, so we tick this one. So this one now. So we do what we call tick to confirm that the liquidity has been taken out. Now there is this zone. Yeah, that is another reversal zone that we have here on 4-hour time frame. So if we check in 1-hour time frame, you can see, yeah, there's a break of structure here and this zone. So what insight I'm getting from here is that we expected these lows to be taken out before we resume a bullish trend according to the higher time frame. But again, if you can see here, we have been bearish, but at least we expect to go bullish in case the market reacts well to this one. So in USD index, I'm a little bit bullish biased. Yeah, according to the zone where the price is at the moment, we expect a reversal. So if we are bullish in USD index, that means the other foreign pairs, the pairs that are against the dollar, we are supposed to be bearish, biased. Yeah, so let's see what we have in gold. In gold, last week in let's say daily time frame, we had this bearish order block, which was our target last week, and then a high here that we expected to be taken out. So the high was taken out. This first was taken out and this one was taken out. Okay, so last week the analysis that we did on Sunday, whereby we expected the market to go back to this zone before the up move, actually that's what happened, and we had the up move. In the course of the week, the market really behaved very, very well. Yeah, never disappointed, because at least we got the second entry here after aggressive entry here, but I didn't take this one. I took my entry on this day. Yeah, when we had a clear break of structure and I returned to this OB, then we had the up move. Again, there is a break of structure that we made here over the week. Oh, my target was this one last week, so we accomplished. Target was taken out, and we were good with what we achieved last week on gold. That's 320 pips up to the zone. So again, now let's focus on what we have this week. Yeah, this high has been taken out, and that is a break of structure here. Yeah, you can call it BMS. But again, if you look at this one, again, we have a break of structure. Yeah, see this? This is a break of structure, because this was the high. When the trading range was from this low to this high, the structure was broken. And the source of the move that broke this structure and took out these liquidities is this 4-hour bullish order block. So after they took out this high and this high, they returned back to this OB. So this was a nice first entry to continue bullish, because we still have a liquidity draw on these equal highs here. This equal high here is our main liquidity draw. We really need to take out liquidity above here. So this is a strong magnet for the market, and that's why we're still bullish in this gold. So again, now we were here, then this was our return to the order block. Oh, I missed this one, but I don't care, because I know over the week I'm gonna get another entry. And so let's move to 1 hour time frame. In 1 hour time frame, this is our 4-hour OB. Yeah, this was the return, and now our liquidity draw is above here, because if you see, our trading range now was from this low to this high, and the return was back to discount, and that's where we had 4-hour order block, and that's what we got, and we resumed the up move. But now, how are we gonna get an entry? That's what we're gonna focus. How are we gonna join this trend? There is this void here. It will be covered. Yeah. So, but first, our first target will be this high when we get an entry. So we move to lower time frame to refine what we have. So on looking at this in 30 minutes time frame, you can see we have a consolidation here. Yeah, there is a consolidation here, and on this consolidation, again, yeah, that's what you can be able to see in 30 minutes time frame. So again, we refine further to 15-minute time frame to see what we have. Now, we have a consolidation here, and there was a slight disruption of network here. So it's okay. I hope it will stay record. So what are we talking about? Yeah, we have a consolidation here, and we need to see a breakout of this one. Yeah, we need to see an expansion. Yeah, it's either we expand up or down. Yeah, but at least for me, I'm expecting, because it is on Monday, I expect an expansion down since we are bullish biased. So we expect a breakout down before we resume the uptrend. And as you can see, there is a zone here where we'll be expecting to buy from. This is a bullish OB, M15. Yeah, this is my M15 bullish OB. So this is the zone I'll be looking for the price to go first. Then I will get my structure from here. I wait for the pattern, and target is the trend. So this is what the kind of move I'm expecting, and we take out this one. So for me, that's what I'm expecting, and I'll gladly wait for this one before I resume or I take a trade. The next pair is the pound dollar. In pound dollar, as you can see, we had a return to this order block here. This is our RTO. This one is our RTO, and that was the return. And again, if you look at 1 hour time frame, we have shift in market structure. Yeah, you can see there is an SMS here. You can see how that order flow works. And again, you can see a break of structure. Then after the break of structure, we have this breaker here. That is my point of interest. That is the breaker. And on this break again, there is another OB within that OB. Within the breaker, there is another OB. So if we check in 30 minutes time frame, let's see what we have. Oh, this was the last week's trade drop. Yeah. Paid well. Target was this low, and I was enough with this because on an intraday trade, I target 30 to 50 pips. I got 70 pips, and I was out. Now, in 30 minutes time frame, you can see the gray zone was the H4 breaker, and this one was the OB that was nested in this breaker. So this is the area we expect direction from. Then we proceed the downtrend because we're bearish, because there is some zones here needs to be mitigated. Like there is a fair value gap here. Yeah, there's a fair value gap. There is this OB. Yeah, there's this bullish OB here that was never mitigated, and there is also this one. So there's a lot to be the market to seek at this zone. Yeah. So we're still bearish. Yeah, last week we had this drop here up in the zone. Again, we need to proceed the drop from this zone, possibly. Yeah, we'll be selling from this zone because in lower time frame in M15, I'll be looking for my sell setups from this zone. I get a reversal pattern this zone, and I'm good to go. So the next pair is dollar. Yeah, euro dollar. And this euro dollar, there is this 4-hour OB here, and we had this equal high that I told you last week that was never mitigated. Yeah, you can see the market seems to get drawn to these equal highs here. And as you can see again, there is this OB still becomes a draw of the market. Yeah, still the market needs to be this one. And again, if you see in daily time frame, there is another confluence we have, this mitigation block. Let me make it blue so that you can be able to spot it clearly. Blue, 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 blue. Yeah. Just like this. Let's move. No, I didn't want to do that. Yeah, that. So in this 4-hour OB, that's where we have the breaker here. And also, let's see equal highs. So this equal high needs to be taken out before we resume the downtrend so that we mitigate some zones here. And again, have let's see what we have in 1 hour time frame. Yeah, see, we are in this range. If they break out in this one, go back to this OB, then drop, that will be a nice trade. But meanwhile, I'll be watching and see what kind of price action they will give me at this zone. And again, trading in a range. So we may sell a little bit to this zone or to take out this low. So this has been on a range since on Tuesday. Yeah, this is the range that the market has been since on Tuesday last week. So, but we're gonna see how they're going to get out of this range. If they take out this highs right into this OB before we drop, that will be fine, because that is what I've always been looking for. If you remember last week's analysis, we said that there is this high here needs to be taken out, and there is an OB here need to be mitigated before we assume the downtrend to take out to mitigate these lower zones. So that's what we expect in euro dollar. We have another one, dollar card. Dollar card paid as well according to last week's, since Thursday and Friday got a good pay. But I really got good pay. If you remember, we did the analysis here. Yeah, after stop trade, we expected return the breaker. So we had this first move targeting this one. So I traded this on intraday because you can see it's still in a range. So I remember well taking my trade from this breaker, got my 50 pips. I invested 50 pips. So it seems I targeted this one. Yeah. But this was another target, but my target was this, 50 pips on Thursday, and Friday again 50 pips from this low to this. Remember, well, 50 pips. This trade actually, okay, let me show you from the other method trade. You can see, yeah, this is what we had from that. This is the trade that we took. If you're in my Telegram channel, you can see, yeah, this was the zone, the point of interest, equal low, taken out, a stop hunter, yeah, break of structure, return to the block. This was our entry here. Our stop loss was 10 pips. I used the minus 10 pips this low because I wanted to cover with this one too, so that in case they were to take out this one, that was okay with me. So I used 10 pips stop loss. My target was 50 pips. Yeah, this high. Actually, that's when the TP was hit, and that's how the market started reversing. So today we're gonna focus on what we're gonna have this week, but we're still bullish a little bit. Bullish. What is this other one? Yeah, here we are still bullish in this pair, so we don't need this one. This was for last week, and we don't need this one. I don't think we need this one too, because this is a trade for last week. So let's focus on what we have. Don't need too much things now in this. Okay, thing. So what we have, so you can see there is a gap here. There's a void that was left behind, and in this void we have that one has been filled up to this zone. There is a fair value gap here. There is this fair value gap. I love using the red one for fair value gaps. And this, yeah. After these guys took out liquidity above here, had to correct back to fill these fair value gaps that was left, so that the market to balance the market, before we proceed the uptrend a little bit, because there is some liquidity draws above here, like this high. Oh, this one is already taken out, so we have this one as our liquidity draw. Again, in H4, we had this OB here that we said we were looking for. Yeah. And this fair value gap. And there was this one that was filled halfway. So we expected this week to be filled fully if possible. But we don't know if that's what this guy is going to do. But that's what at least we expect. And we'll see what will unfold. Now, there is this fair value gap. And below the fair value gap, we have a bullish order block. This one. Yeah, you see this? This is a bullish. I'm going to use let me use 4-hour OB, because that's mostly the one. I don't think we need these ones. They make my chart dirty. Don't need you. We don't need you. Okay, yeah. Then you need to be up to that area so that my chart looks cleaner. Now, you see, this was the 4-hour fair value gap, filled up to halfway already, and it needs to be fully filled. But again, you can see we have this order block. Again, there is something making my chart here and claim you from here. Just the visualization to be only on daily time frame, because that's where we marked it from. Good. So if we move to 4-hour time frame, so that we mark that OB in 4-hour time frame, that is the OB. Yeah. If we refine it further into 1-hour time frame, can refine it up to that zone. Yeah. Good. That is 1-hour bullish order block. That's where I expect to take my trades. So that is my point of interest actually. Yeah. Blue. That will be okay with me. Yeah, that one. That's my bullish order block and this fair value gap. So once they fill this gap right into this OB, we're gonna look for buy setups. So in 30 minutes time frame, let's see what we have. That is OB. I don't know how to name it. So in M15, you can see this is our Asian. So BSL, SSL, and this is the OB. And if we refine further, you can see in M15 we have this. This is our bullish OB in M15, and there is this mitigation block here. So at least this is the zone where we expect the price to react during peak hours before we resume the uptrend, guys. So guys, that's all I got for you this week. So if this analysis matches with your analysis, then you're good to go. So thank you guys. I wish you happy trading and a nice week ahead. So don't forget to prepare well before you execute any of the trades. Yeah, at least have a plan before taking a trade so that you don't get trapped. So guys, thank you. Till I see you there. See you next time. Stay safe.